Okay, guys, good morning to everybody. Today is the 19th of August, 2026. CRAZII Global Market Talk with KEL. CRAZII, anytime, anywhere. All right, guys, good morning to you. This is KEL. And yes, indeed, today will be a very important day for trading. Actually, it's today and tomorrow. So that's why I want to bring you guys in this morning. All right, and before we start the morning session, once again, disclaimer apply as usual. Now, some people have been saying this. Actually, the most important part of the day is to have this CRAZII Market Talk with KEL. Because in the morning, KEL will give you the best and most important information, market direction, and of course, over the span of time, you can see that it does really help a bit here and there. Yeah. All right. So what you can do is this: for those who are overseas friends, you can turn on your ChatGPT, your Gemini, your DeepSeek, and any software that you can hear me and translate for you immediately live. Yeah. Okay. All right. So let's start this session now to talk about the global market first. Okay. Now, in the global market front, Trump says no talk scheduled with Iran as he teases action in Hormuz Strait. Now, there's a lot of mixed signal right now. Some people are telling that Donald Trump is confidently telling people that the Strait of Hormuz is open. But based on what we are seeing in terms of the flow of traffic on the Strait of Hormuz, it doesn't reflect the same thing. And ship get attacked in Hormuz, kills crew members, while Trump say the strait is open and operating. So again, what Donald Trump says and what is happening in the world is totally different. So again, is Donald Trump lying or is the world lying? That's a very interesting. And of course, the global bond yield continues to soar, obviously, because now the governments have to pay the price of the US-Iran stalemate. So which means, in short, when the war is ongoing, the government bonds actually drop in prices. And when the government drop in prices, the yield goes up because they need to attract people in, so the yield actually goes up. And that's a wrong thing to do, because when that happens, meaning in short, people are not comfortable with whatever happening in USA. Okay, so that is what is happening right now. And of course, recently the Chinese liquor market Maotai has slumped, and that speaks about the country economy, because Maotai is one of the favorite drink to put on table for luxury, what they call feel, right? I mean, China friends do actually bring Maotai to on the table. Yes, indeed, I do realize that recently drink of Maotai is much lesser than usual. So that also a reflection of what's happening in the China economy. Okay, so I think that is the main thing for the market. And of course, the 30-year Treasury tops 5.33%. This is a very high level for 30-year, and it's a 19-year high. So all of this speaks for itself that the US economy is really not doing that well. Okay, so let's look at the Fed fund rate now. It's 28 days to the next FOMC meeting, and you can see right now it's a bit of shifting at the moment. Now, the current rate is at 3.5%, and 65% is actually looking at a rate to stay, but 35% is expecting a hike. Now, do note, just about 3 weeks ago, the hike intensity was actually more than 50% for the month of September. But apparently, because of the recent economy and stuff like that, it seems to be changing. But I beg to differ. I believe that in the coming days, this number will go up. Now, why is that so? I felt that the market will be thinking of rate hiking if inflation starts to go up again due to the high price of the oil. All right, that's my personal take. And of course, you can see right now for 28 October, all right, the market is still expecting the rate to stabilize. So it's a lot of talking. Now, what you can see is that the Fed is using Fed talk to push the market to believe that there will be a rate hike, but intently, they are not doing that. And in fact, itself, right, this is how they control and stabilize the economy without spending money or basically hiking interest rate. But then, would that be able to continue? I doubt so, because to me, it's in the Chinese saying, 空手套白狼, meaning you use nothing to exchange for something or get something without any coming out on your hand. So this sort of thing itself, right, it won't stay long. So it's like a boy who cried wolf. All right. Now, today we have the earnings coming in. So let's look at the economic calendar for this week. Okay, let it filter for a while. It should be filtering soon. Okay, so today on August 19, what do we have? Now, August 19, we have the crude oil inventory, so it's not going to be the most exciting thing, but of course, the inventory is expected to be in a negative zone once again. All right, and for tomorrow, we have the FOMC meeting minutes, and that should give us a bit of heads up on the interest rate direction. And of course, we have Philadelphia Fed Manufacturing Index, and after that, it will be initial jobless claim, which is expected to be flat. Okay, but the Philadelphia Manufacturing Index is expected to drop. That is another caving sign of the U.S. economy not doing well. And of course, for this week, on Friday, we have the S&P Global Manufacturing PMI, but it's on pending, so it may not be confirmed yet. It's a preliminary release, yeah, so it may not be out on Friday. Okay, so that is the news for us. And of course, I did talk to you about COSB, and I told you guys to be very think of COSB at 7,000. I did tell you that once COSB hits 7,000, COSB will likely be coming down, and truth be told, COSB hit 7,000 and then went down and closed lower about 6,400 as of yesterday. And I strongly believe that COSB is going to go down again. I still believe that COSB would be able to come back down to about 5050 in the next 2 weeks itself. Okay, I am not bullish on COSB. I believe COSB need to come down. Maybe another one more round touching over here like a triple top, a triple bottom, then maybe we'll see a market bottom. All right, but that's my own personal take on the COSB. Okay, all right, guys. So that is the what they call the view of the global market and Korea market. And I want to show you something is the US 10-year yield, and you'll see my point, and that will cross into gold, and then you'll see the thing bigger. All right, so let's look at this is the 10-year yield. All right, the 10-year yield is surging up. Yesterday, we have it tapping the high of 4.78%, 1.748%, and then after they pull back a little bit, but today it's mounting up again. So it's very, very clear. If the bond yield goes up, okay, that means that the gold price most likely will be coming down. Okay, so just take note of that. Yeah, there's something very important. And if you look at the 30-year bond price, you will see the bond market has collapsed. Okay, yes, really collapsed, and you can see if you're judging it over the straight of years, over, let's take a look. Right, the last time we see something so crazy, it was back then in, let me just bring it in. Yeah, that in 2023, that was where the bond price came down to 82. And of today, you can see very clearly the market failed to stay above. All right, there's some buying yesterday to push down the yield, but then that is because it's a bit oversold, sorry, and the market just went in to buy. But if you look at it for the long haul, it is still very far away. And in fact, if you look into history, you can see very clearly that we are now at the all-time low level, okay, all time. So this is a very, very bad situation for the America market, all right? So just be careful. I know that some of you are telling me, but KEL, the market is still doing well, US market is doing well. Well, okay, we can just look at it from a bigger perspective, is that the front yard is still nice. The front yard is still open to public. The front yard looks attractive, but the backyard is actually burning, right? The backyard is actually burning, and this is going to burn up big, and then you spread to the front yard. So that's the reason why I need to be very careful. I know that by saying this, a lot of people is like get uncomfortable, and they feel that, KEL, you're being too pessimistic. But I think over the last few months, I've been telling you about my view about 2026 and 2027, and I tell you that the market is not likely to able to hold too long, and this is something that you need to really reconsider. Yeah, okay. So that is my view on that. Now, having as usual, I can't connect to my MT4, so I have to go back to my CRAZII.com to show you the chart. Yeah. All right, so let's look at gold today. Yeah, okay, let's look at gold. Let's make it bigger. Okay, so let's just study gold for today. So what do we expect to see? Okay, so go with me slowly. Now, gold, we have a CCYR. It has turned from yellow to red. Okay, so that is gold. And the thing is this, for gold right now, is challenging itself, staying above OP. Now, OP is 4334, and now it's above OP. Yeah. Now, because today the KSI is green, so above OP is a buy. But because it's a red candle on the day chart, so the buy, the quantity is supposed to be reduced. Okay, that's the first thing to take note of. The MLP today is 4375. So if the market is strong enough to test MLP, that will change the downside. But I don't think the market can sustain to go up that much. With the bond price now, the bond price at this level here, I believe that this is just only a technical rebound on gold. All right, I believe this is a technical rebound on gold. And oil price now, as you can see, is already moving up to $84.90. So if the oil price get pushed up to 85.50, I think gold price will be pulled down. Okay, so oil price go to 85.50, then gold price will be pulled down. Yeah, that's the first thing. Now, if you look carefully, you notice that there is no any more technical level after. If the market breaks OP today, there's no technical level until here. Now, this is where this is the KCB, right? So this KCB is approximately around 42 area. Let me just double check on this. It's about 42.47. Okay, around there, 42.47, around there. Okay, so if gold is to break 43.34, there is a probability for gold price to come back down all the way below 4,300 and go down all the way to 42.47. Now, it is possible. If oil price is to surge to 85.50, then gold price to get hit is much higher. So watch, guys, watch the oil price at 85.50. That will give you a little bit of heads up on the gold direction. Yeah. Now gold is trying to find some support at this OP price, and it's trying to get its health into the market. But as you can see, the price did go up from the opening price, but now it's been stuck around 43, 46 for quite a while. So let's see the market. All right. Okay. So that is the first target for gold price. If gold price is to come off, that will be the first target for gold. Okay. Okay, gold price down is 43.50. All right, slightly higher than where we say. Good, that's a good sign. But let's hope that it stays there. Okay, so the 5-minute chart. Okay, we have a bit of upside now for all gold. Okay, gold is going for KTR +1. Yeah, and it will hit KTR +1. Okay, so gold this morning opens right here. And when gold opened this morning, you can see it went sideways for a while, and then it came down, but it's not enough to go down. Then we have a double diamond. So the price went up first wave, and now we have the second wave, which is the K trend. Oops. Not sure why suddenly Patricia can turn on his cam. Okay, can you see the K trend here, everybody? This is the K trend of gold. Very nice. You can see, very beautiful. Okay, let me expand it out for you. So this is the lowest closing of this entire red cluster, and this is second lowest closing. And you can see that the market literally, come very nearby. And this is a K trend. So you should be buying somewhere around here at 43.38 level. So if you buy at 43.38 level, you would be able to see profit right now at 43.451. And I think the market have just touched the KTR +1. All right, just very nicely touched. And of course, you can see also at the same time, this is also a diamond line before the new one now. Okay, this is an old diamond line. So this become another buy, which is at 43.45, around there. So that is a KDK over for gold. All right. So what happened is that if you have followed the KDK methodology, you will know that this morning, the last 10 minutes was a buy on gold based on K trend and based on KDK. All clear? If all clear, press number 1 right now. All right, I will be doing a short video on KDK and K trend. All right, very soon. All right, I just need some time to have time of my me time. Recently, I've been traveling a lot, so I don't have time for myself. But today, I think I have. So I'll just do something for all of you, yeah? Okay, so this is the very nice KDK trade on gold. Okay? All right, so those who bought gold, congratulations for your buy. Well done. Okay. Okay, so just now, as I said earlier about my gold view, is that gold, if you look carefully, based on the gold K trend, you can see that. Okay, let me just box it up for you. So this is the first wave, this is the second wave, and this is the third wave. So it's very clear that gold is on the uptrend. KDK is uptrend on K trend, and that's why when gold shoot up over here, it went all the way to the sky, basically clearing all the stop loss that's been created over here. Okay, so now the question is this the fourth wave? Well, it is potentially the fourth wave, because you have to be objective here, is that the market, this is the third wave, second wave, first wave, right? So this is actually potentially the fourth wave. Now it's kind of difficult for the market to come down all the way to create the dismantle the K trend. So unless this happen, okay, unless the market do something different, unless the market go up first, then come back down again, then create a new wave over here. And if this wave is lower than the one in front, then that uptrend is going to be annihilated. Okay, if not itself, right, at the moment right now, this is the fourth wave. Okay, so unless something change the next 2-3 weeks, if not, this is the fourth wave. And that's why now gold is rebounding pretty strongly. So if let's say gold is, this is the fourth wave, if this is the fourth wave, then look out for the yellow candle. I repeat, look out for the yellow candle. If the yellow candle do come out maybe sometime this week or next week, then this could be the fourth K trend upside. Okay, so all clear, everybody? Very clear on what I'm trying to explain here on the K trend on the day chart. If yes, press number 2 right now. Right, so gold now is trading higher as 4356 at the moment, pushing up a little bit. That's a good sign. Okay, all right, but the thing is this, I need to warn you guys, is that how high it pushes up, and it's good if it stays there. But if it doesn't, if you U-turn and come down, right, then the selling will be double. All right, so that is something to take note of. Yeah, I will explain this more if gold breaks below OP later. Okay, all right, so that will be the gold upside. And then we look at the next one is oil, the one that I say today. I talk about crude oil and oil gold. Okay, let me just bring you in on the oil market. Okay, so oil market now, we have a very important thing to take note of. Okay, so the thing is this, okay? Oil back then, because this is a part of a K trend on the downside. Now on the downside, we use yellow to yellow, right? So this was the K trend downside, and that's why the oil price came down. Okay, fine. Then there couldn't be upside because the rate is actually lower than the previous rate. So there's no K trend upside. Don't have, yeah? Okay. So now everybody, I want you to take note of this, is that if I put this thing on the screen, this is the closing price, right? I'm gonna put it there. Okay. So this price, let me bring it to you. What's the price? The price is at 85.24. Okay, write it down. 85.24 is the closing price of this yellow candle. So what am I trying to explain is this: if oil price cannot go above 85.24, the K trend downtrend is still intact. 85.24 is the level. But if oil price breaches and close above 85.24, then this will be the next uptrend of oil, and that is going for 91. So this thing is very important, because if oil price really do break up above 85.24, then gold price is going to come down, that's for sure. Okay, so that's why today I emphasize on gold and crude oil, is to tell you that these two guys are actually have their fate bundled together, and we need to observe this. So 85.24 is not too far away from the current price. All right, it's not too far away. Currently now it's 84.82, and gold price is 43.56. So the thing is this, just be careful, guys. This is not going to be a joking matter. If oil price do break above 85.24 and stabilize above it, then it's a definite call up towards 91 for oil. And if oil go to 91, the US economy will have bit of pullback. We'll have the gold price coming down. Okay, all clear? If all clear, press number 3 right now. Now, this type of cross-reference market, usually we don't talk too much on this, but because oil price and gold price are quite bundled together this time around. Now, usually they don't come this way. Usually gold price and oil price are independent and they move together, in fact. So for this time around, when gold price and oil price are not moving together, that's where you need to be very, very careful, and you need to do some assertion on this to make sure that you don't get caught on the wrong side of town. Yeah. Now, with Donald Trump not able to confirm that he's opening the Strait of Hormuz, but the still ships are being attacked, then being attacked that means that the market, that means that the Strait of Hormuz is not open. And if it's not open, that is not a good sign, because the market wants it open. So if the market cannot have it open, then traders need to be very, very, very careful. Okay. All right. So that is something that I want you to take note. Yeah. Okay. Just give me a moment. Oh, gosh. I need to send this out to everybody. Okay, so that is my personal view. All right, so let's look at the last market for today, and that would be the Dow Jones and the Nasdaq. Okay, so very clear, the Nasdaq is coming down. I already told you guys to be careful on the Nasdaq, and it has proven my point. And of course, Nasdaq now is very nearby to the 4 diamond. The 4 diamond is over here, and if you look carefully, the 4 diamond now, the closing price of it is the one that's holding the market now on the Nasdaq. So which means that the Nasdaq now, okay, is really, really holding on top of it. As you can see on your screen, that yesterday's low was exactly at the diamond line. So the market now is coming down again. If the market break the diamond line, then that is what I am expecting the market to hit the pivot 2 as a first support. And if it breaks down, it will be a free fall all the way to this KCB at 52,721. Okay, sorry if I. Okay. All right. So again, what could lead to the oil price or could lead to the Nasdaq coming down despite the KSI green? The only thing is this: fundamentally, there's a lot of boys selling, and the only big Dow Jones selling, and the only thing that's coming down on the Dow is that the oil price. If the oil price basically doesn't do well, then the market will suffer. Yeah. Sorry, this one is Dow Jones, not the Nasdaq. Okay, let's look at the Nasdaq. Well, the Nasdaq has a perfect sell yesterday. We have the KSI turning red, and with 4 diamond, draw the diamond line, and you can see the market rejected the diamond line, and then the market now sell off. So today the market is very, very nearby to the pivot now, and if the market stays below the pivot, then the selling will continue, especially if it breaks the MA30 at 29,221. So if the Nasdaq breaks below the MA30, then there will be some selling down all the way. And the KCB at 28,796 will be my price target for today. So of course, I don't think it happened in the same day, maybe this week, but 28,796 will be the price target. So yesterday when I called for sell on Nasdaq, many people was like shocked. How do I know the Nasdaq coming down? But the only thing I was want to tell you is that because of the 4 diamond, the 4 diamond basically reverse on it, and then after that there's 2 KCB that's very nearby. So I'm pretty sure that this should be the selling point of the market. Okay. All right, guys, so that will be the all. Okay, someone requested me to talk about Bitcoin. Just hang on, no problem. Bitcoin. Now, Bitcoin is still holding itself very strongly at, Bitcoin is holding itself strongly at above 64,000. We have a KSI green and we have a 4 diamond 2 days ago. So it's holding up the fort. So as long as the market holds above the KC, the diamond line. Let me just check the diamond line. What's the level? The diamond line is at 64,372. Okay, so take down, guys. 64,372 is the diamond line of the day chart. So now the market is staying above it. So if the market breaks below 37.2, then yes, indeed, there will be some selling. Let me just double check again. 372. So if the Bitcoin do break below this number, that will be sold out, and the first target will be the MA30 that has supported the market yesterday. Now, if the market breaks below MA30, then the free fall is actually expected. Yeah. Okay. So today, a lot of technical levels are all being watched by the market. A lot of technical levels are to be watched carefully. So all of you, as long as you guys do what you need to do and trade accordingly, you should be fine. Okay, guys. Okay, gold price is now trading a little bit lower from where we are earlier, and oil price is now at $84.95, very near to the 85 level that I'm actually expecting to happen. Okay, so I'm big bull into the crude oil market. I think crude oil will go up, and of course, I also bought some OXY since I'm bull on oil. So OXY, as you can see yesterday, trading higher a little bit. It went up, it gapped up to the high and then pulled back a little bit, but still within the strength. And most likely it's going to test the targets that I set for you guys. I believe that this OXY would be able to travel much higher. I think it's going to go much higher to about 60 to about 67 level. Where are we right now? 59. Okay, so that is OXY. Okay, so traders, do watch out for OXY. I believe that this counter is going to touch the high back then in this March. I think this counter OXY do have the potential to trade higher in the near term together with oil price. Okay, that will be all for today's sharing. Thank you guys for coming in once again. And I hope you guys remember what I say about oil and gold. Do trade well and then get caught by the market. Yeah. Okay. That will be all. Thank you very much. Take care and make sure that you do your risk management. Bye-bye.